Alrighty, what is going on, everybody? Welcome back to another CYPRX fundamental video update. Absolute massive price action happening right now in the digital asset space. Billions upon millions of dollars liquidated over the past, let's just say, week and a half in the digital asset ecosystem. And I want to really break down for you guys. No editing in today's video breakdown. I don't have time for that. I got to jump on real quick. I got stuff to do today at the ranch. And make this fundamental update for you guys so that way you really truly understand what is happening in the digital asset ecosystem, why all of these bullish moon boy price predictions from October never came into fruition, and what's really going on in the digital asset ecosystem. So if you enjoy these deep fundamental breakdowns for you guys, really enlightening you all on the current environment, I'm not going to edit this. If I mess up, stumble on my words, we're just going to continue through it. And I really want to give you guys an in-depth breakdown and insights from within our private CYPRX community and why it's so imperative and important that you join a community of like-minded individuals. I get that there's a small paywall to join our Discord, but our private community members are always at the forefront of what's happening via the retail crowd that is being diluted information and misled to believe something in these crypto markets. Okay. So with that being said, I'm going to show you guys both what's going on fundamentally in the digital asset ecosystem, what's weighing on price. We're going to go over some optimism in the markets. I'm going to go over the total cryptocurrency market cap, take a look at where we're at, and give you guys a sort of optimistic perspective, even though we're in a market downturn. I'm going to show you guys how in previous video breakdowns we were calling accurate targets on the digital asset XRP and Axelar, and then just ended with some future price trajectory on where we could be potentially headed depending on the risk on, risk off market mood that we could see unfold later this week. Right, real quick video breakdown, just flowing through this information real fast for you guys before I head out today to go and do some stuff on the ranch. All right, so let's just share screen. And I just want to show you guys first the retail spectrum of things and why it's so imperative that you all attempt to dig a little bit further and join communities, for example, like ours here at CYPRX, where I hand type out fundamental reports and we have the most accurate trading levels on the face of the internet right now that are available to retail traders, i.e. the institutional delta zones that we provide to our private community members via our institutional scalper who has over 13 years of trading experience. So just to show you guys what I'm talking about, this is a Cointelegraph article, okay? And it's talking about what is going on with the crypto market. Why is the crypto market down today is the title of this article, November 1st, 2024. Literally the only thing that I could find that is actually important to what's happening in the market right now is one tiny sentence. And again, you guys can go read this yourselves. It's from November 1st, 2024. Just go type in this headline right here in Coin Market Cap in the article, or Cointelegraph, excuse me, and the article will pull up for you, right? And read through it. And you're going to see all the shenanigans. This is all just fluff. It's all bull crap. It's unimportant stuff. The only thing that I could find that was important in this whole entire piece is it says right here, market participants are also watching the incoming earnings report from the tech companies, geopolitical tensions in the Middle East, and the Federal Reserve's rate cut decision on November 7th. Remember, I've told you guys and shared with you all important and reputable individuals mentioning that some of the major risks that still hold weight in this market, some of the two most major important risks are central bank positioning, right? And geopolitical risks. Okay, I showed you guys that video clip, and I've been trying and attempting to show you all that this stuff is extremely important. Outside of that, this whole entire retail article right here is absolute fluff and bullcrap. It's just a bunch of filler, probably written by somebody with no actual valid credentials, like this guy, or whoever this is, Nancy or a girl. Nancy Labal is who wrote this article. It's a bunch of junk. Okay, so let's jump into the CYPRX report and really enlighten you all on what is happening in the digital asset ecosystem. You can actually see actively right now, some of our private community members are reading our fundamental report. Today, as of time of recording, it is November 3rd. You guys probably won't get this video until tomorrow morning, which will be November 4th, the day before the election. So there's a lot of volatility and uncertainty going around surrounding that, which obviously, of course, plays an important role. However, two of the main factors we're going to cover in today's overview. So stick around for this. Again, if you're one of those individuals that actually likes to further your education, you've made it this far in the video and you're like, dude, what the heck is going on? Why did all the Fibonacci moon boys tell me that October was going to be exponential? My digital asset XRP was going to go to new all-time highs because Bitcoin went to new all-time highs, and what's happening? And you hate being confused. Stop that. You don't have to be confused in your trading and your investing career. There is valid information and communities out there that are putting out valid information and education for you all to understand what's happening in the market, why your assets are performing well certain weeks, certain days, certain months, and why some days, certain weeks, and certain months they are not, right? Don't be confused. Don't be the type of chess player that's playing chess in these markets and has no idea how to play chess, right? You want to play chess in these markets and understand how to checkmate your opponent. Okay. So I'm just saying, there's those individuals that take that immature approach. And if you're one of my followers, it would behoove you to join the CYPRX community, at least try it out for a month. And if you don't find it of, importance or valid information, then you don't have to continue paying your monthly subscription. You can cancel it and you can move on. But I guarantee you, you will find value 110%, whether that's through the technical analysis, the fundamental Zoom calls, the institutional deltas, the support that you have from 3 different mentors, the crypto related research that we drop every single day that never reaches the mainstream. I mean, there's literally some type of avenue of approach that you can take to find value in CYPRX once you get into the private community. All right. So again, it would behoove you. Anyways, besides the point, let's jump into this breakdown. I'm done my rant. It's just so crazy to me that people don't and try to enlighten themselves further in this space to educate and push their understanding of these markets forward. So let's just jump in. So you guys have now seen the retail article, literally only one sentence talking about central bank positioning and Middle East tensions. Well, what have we seen over the past, let's just say 24 hours? I mean, massive breaking headlines. U.S. bombers arrive in the Middle East as concerns of Iranian attack on Israel mount. Okay. And we've been attempting to tell you guys this for some time. The geopolitical risks remain one of the biggest risk factors in crypto today. Still standing in the market. It has not been alleviated. We're still seeing that tension weigh on risk sentiment. Okay. So let's break this down. The cryptocurrency market remains under pressure with over $140 billion lost from October highs. Recent intraday factors contributing to the risk-off market sentiment, including rising tensions in the Middle East, creating geopolitical risk, and last week's surging U.S. Treasury yields, particularly the 10-year note, which hit an all-time high as markets closed on Friday. This combination has led to a shift towards a risk-off sentiment, driving investors into safe haven assets and impacting higher risk markets like crypto. Excuse me. Like I said, no editing. I'm just going to flow through this. All right. So number one of the major factors weighing on risk sentiment, pushing sentiment down, right? Liquidating massive over-leveraged buyers and just completely diminishing hopes of bullish moonboy price targets via these individuals that are uneducated in this space. Okay. As I mentioned, like we'll get to this video breakdown in a second, where 7 days ago I talked to you guys about the bullish moon boys, right? And they're like, "Oh, XRP broke out of its 7-year trend." What the heck does that? Y'all don't. Oh, never mind. I'll get to that in just a second. Middle East tensions. Okay, let's get back on track. And their influence on global risk sentiment. Okay. Escalating conflicts and diplomatic efforts, increased military confrontations and diplomatic complexities between Israel and Lebanon and Hezbollah and Lebanon-based group backed by Iran have created a volatile environment in risk assets and assets globally across the board. It's not just risk assets. The U.S., represented by Envoy Amos, has been involved in attempts to negotiate a ceasefire. However, calls for unilateral ceasefires have been denied, with Lebanese officials indicating that Lebanon would only support a mutual ceasefire under UN Security Council Resolution 1701. Amid diplomatic gridlock, violence has escalated, with Israeli strike targeting Hamas officials in Gaza and Hezbollah increasing rocket attacks on Israel. And you can see this is a report from November 2nd, 2024. Rockets from Lebanon wound 11 in Israel. U.S. military readiness. So in response, the U.S. has redeployed military assets in the region, including B-52 bombers, fighter jets, and Navy destroyers, with plans for further flexibility through Abraham Lincoln Carrier Strike Group. These strategic moves underscore the U.S. commitment to regional stability, reinforcing its readiness to respond to any direct threats against American personnel or interest. And here you can see an updated fundamental piece from November 1st, U.S. to deploy B-52 warships to Middle East. And then today, what happened over Sunday, they arrived. All right. So 2 days later, boom, they arrived. Again, geopolitical tensions and escalations have continued to escalate. So let's talk about the impact that this has on market sentiment and how it creates a higher demand for safe haven. You have to understand this liquidity inflow and outflow. And if you don't, you will get manipulated into believing that Right now, the reason why XRP is down is because Brad Garlinghouse is selling on you or dumping on you, right? Whatever bullshit the retail crowd on Twitter has manipulated people into believing is wrong. Okay. Brad Garlinghouse right now is not sitting at his penthouse selling XRP on your head because he hates you. That's not why your XRP is down. Your XRP is down because of large institutional, or I just say institutional investors, anybody fits in that category with more money than you and I that actually moves these markets, and they are putting their capital into safer haven plays. All right. When you understand that, you stop believing all the bull crap on the internet. So, the heightened Middle East tensions have triggered a shift in global risk sentiment as investors seek safer assets to mitigate exposure to geopolitical instability that's happening right now. Traditional safe haven assets such as US Treasuries and the US dollar are gaining traction. As we saw, you guys can go and look at this on the charts, right? I'll share with you all. You can head over, you can add this stuff to your trading view if you have a trading view account. You have the US 10-year, right? Look at this. Look at how much money flew into the US 10-year, right? This was Friday's price action. Look at that. Okay. Where do you think liquidity is flowing into? It's flowing into US Treasuries, US bonds. Boom. Look at that. And out of risk assets. If you go look at the dollar was also strong on Friday. Massive inflow of capital into the dollar as we closed on Friday. Massive outflow of risk assets. So you can physically see on the charts don't lie, where the liquidity is in the market and where it is not. And right now in crypto, because of the risk factors weighing on risk sentiment, money has been sucked out of risk assets and been pumped into safer haven plays. For example, in this case, US Treasury yields and the dollar. All right. So moving on. So not only we have rising tensions in the Middle East, creating a risk off market environment, but we also have rising US Treasury yields. And we're going to talk about these market implications. So yields reach historical levels, as I just showed you guys on the charts. On Friday, the 10-year Treasury yield surged to nearly 10 basis points to 4.382%, with the 2-year yield rising by 5 basis points to 4.216%. This increase marks a continuation of yield rebounds from earlier in October, despite expectations of future Federal Reserve rate cuts. The primary drivers of higher yields include persistent geopolitical uncertainty and steady labor market data. Here you can see is a CNBC report from November 2nd, 2024. The 10-year yield Treasury rises above 4.3% as traders ignore noisy jobs report. So let's talk about this. The mixed labor market signals that we got on Friday. Although October's jobs report fell short of expectations, 12,000 jobs added versus 113,000 forecasted, the stable 4.1% unemployment rate points to a resilient labor market. I highlighted that in bold for our private community members so they understand. Temporary disruptions such as hurricanes and labor strikes have impacted these numbers, but the market anticipates that underlying labor strength could prompt the Fed to approach rate cuts cautiously. How higher bond yields impact riskier assets. So I broke this down in detail for our private community members, which you can see right now are actively reading our private report that we send out to our community. And you can see our report, look at our report, okay, compared to this free report that you get from Cointelegraph that is a bunch of fluff. This is what the vast majority of retail traders are reading, which is why they're so misled and distracted. And this is what a very small percentage of enlightened individuals and people who want to push themselves further in their trading and their investing career get to read, because they surpass a paywall and they join a community of like-minded individuals. You see the difference? This is so monumental. So let's talk about higher bond yields, because we saw rising bond yields on Friday, which again weighs on risk sentiment. So increased capital and cost. Rising yields raise borrowing costs, potentially slowing economic growth and reducing attractiveness of higher risk investments like stocks and cryptocurrencies. A shift to safer assets. Treasuries offer relatively stable returns, drawing investors away from riskier assets when yields rise. Steepening yield curve, The widening gap between short and long-term yields reflects concerns about future economic challenges, reducing investor willingness to engage in higher risk markets. Then we have market expectations for rate cuts amid elevated yields. So this is the last portion of our quick update for our private community members. So despite bond yields, markets still expect the Fed to cut rates to counter growth risks. However, ongoing geopolitical risks and economic resilience, particularly in the labor market, are causing yields to stay high, sustaining demand for safe haven assets, even as the potential for rate cuts loom. So how many reports have you all seen that are like, oh my gosh, the Federal Reserve is going to cut rates, risk assets are bullish, everything's bullish, buy, 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 buy. But then you're like, well, what the heck? I read a report the other day that said rate cuts are happening, but now my portfolio is down 40%. How does that make sense? This is why, right? We're seeing more demand for safe haven assets in the now intraday, okay, because all this sentiment could change this upcoming week, which again, we will update our private community members on. But now you all understand what's happening. So, in conclusion, rising geopolitical tensions and elevated bond yields are creating a complex landscape for the crypto market, with safe haven demand increasing amid investor caution. The interplay of these factors suggests continued pressure on cryptocurrencies as investors balance global risks with market expectations for Federal Reserve policy. All right. So, just to put this to bed, again, this is just a glimpse of some of the in-depth reports that we provide to our private community. I literally hand type out these reports. I do hours of research each day to update our private community members on what's happening in the market, risk on, risk off market mood, what the sentiment is. We have Zoom calls at least 3 to 4 per week minimum. Sometimes we have more, sometimes the week is a little bit heavier, but minimum 3 to 4 Zoom calls per week, breaking this stuff down for our community members so that they're not confused, and really enlightening people on what's happening in the market, not just typing them out a bunch of fluff and, just irrelevant information. Okay. So now that that's out of the way, let's get into the crypto technical analysis. So I'm still hopeful, even though we've seen massive liquidations in the digital asset ecosystem. Reason being is because most recently, in October, we created a new, not necessarily high, because we didn't create a new high, but the trend since August has been every single month we've created a higher high. Excuse me, we've corrected that higher high. And then we've continued that overall trend. And right now, that price action is still holding. So let me show you what I'm talking about. This is the August low right here. For the lows, I'm going to use green circles. And for the highs, I'm going to use blue circles. Okay. So this is the August low right here at roughly around $1.7 trillion. And this low was created by multiple different factors. It was the Bank of Japan interest rate hikes, creating a unwind of the yen carry trade, which is when investors borrow cheap yen to buy risk assets. That sentiment changed as the Bank of Japan on July 31st hiked rates. We also had geopolitical tensions in the Middle East, the beginning of August unfold, which created a risk-off sentiment, and we had bad NFP reports creating recessionary fears on the global economy, right? Particularly on the U.S. front. All of that sentiment changed in August, and we saw crypto prices recover. And you can see right here, again, utilizing a blue circle for the highs, August high topped out at about $2.2 trillion. As we rolled over into September, again, the month changing hands, and investors with much more money than you and I took profit on their positions from August, the market pulled back. Okay. So taking a Fibonacci, utilizing it properly, we can see from the low of August to the high of August, we can see that the market corrected about 79% from August lows and continued its rally. All right. This trend that I'm talking about continued from September, or from August into September. So now we can do the same thing, right? Market participants saw a turn and a change in market sentiment back to risk on. And in September, the market bottomed out at roughly about $1.8 trillion. And then September highs came in at about 2.28 trillion. So we can use a blue circle for the September highs. So you can see this was August price action. Then we corrected about 79%. And you can see from September low to September high, again, taking a Fibonacci from the September low to the September high, the market corrected about 50% as we rolled into October. So same thing happened. As we rolled from September to October, investors that profited with much more money than you and I, that bought at September lows, that actually moved these markets, as we rolled into and the market corrected down to 50%. So now here we are, right? This is why I'm still optimistic above $2 trillion, which is the October low. Okay, so let's just put a indicator on that real fast so you guys can see. Roughly about $2 trillion and some odd change. Okay, so now let's measure the October low. So October's low came in at about $2 trillion. Again, a green circle for the lows. And October's high, utilizing a blue circle, came in most recently at about $2.42 trillion. And right now, the market is correcting as we are rolling over into November. So yet again, this is, in my personal opinion, as long as the market is above $2 trillion, we are still in this uptrend that the market has most recently created. So you can see now that we're rolling into October from the October lows to the October highs, just like we did back in August, rolling into September, we corrected. From September, rolling into October, we corrected the bullish move. As long as we are above $2 trillion, even though it's going to be painful in the short term, taking a Fibonacci from the low of October to the high of October, we still have some room to correct because right now we have only seen a 50% correction. Back in August, before the market flipped back bullish, when the market was rolling from August into September, we saw a 79% correction. You can see here. September's rollover into October was a smaller correction where we only saw a 50% correction. Again, taking from the low to the high, you can see the market corrected about 50% rolling into September to October. So right now we are in the precipice of potentially experiencing more downside momentum depending on how deep the market corrects. Again, taking from the low of October to the high, utilizing a Fibonacci, we can see that right now we are only in a 50% correction phase. Hopefully you guys can see that, right? Okay. So right now, if the market sentiment continues to remain risk off, there is still room to the downside where we could correct down into 62%, which would put us at about $2.1 trillion. 79% would put us a little slightly below $2.1 trillion. And a full 100% correction will put us back down into $2 trillion, which in my personal opinion, as long as we do not break below and close bearish below $2 trillion, this uptrend still remains intact. Yes, it's going to be painful. But again, in the short term, looking out, in the long term, zooming out and looking out, this overall trend has remained healthy since August, where the market has corrected the previous monthly move and continued its trend. So right now, I'm just attempting to show you guys this, that even though we're in a temporary market downturn, as long as we remain above October lows, which is the previous monthly low, I remain optimistic. Okay. I will continue to look for opportunities at discounted price levels, which now we are going to roll over into. So I just wanted to break that down for you guys again. Yes, it hurts in the short term, but zooming out, we are still holding and maintaining bullish price action, i.e. we have not broken a previous monthly higher low. And that higher low comes in at about $2 trillion. If we break below $2 trillion and the market sentiment continues to remain risk off, and further geopolitical escalations weigh on prices, or maybe some type of political instability or some type of central bank positioning, then we can consider, possibly taking profit on some of the positions that we were getting in back in August and rolling that into stable coins that are earning yield as we await for a further decrease in market price action. But for now, above $2 trillion, I remain optimistic as long as we continue this overall trend that we've seen and experienced since August. Okay. So now that that's out of the way, I just want to play two video clips because we're going to get into XLR price action and XRP price action. And I want to share this with you guys. This is a video from 7 days ago. Remember, we've been tracking this price action for months now for you guys. XLR price predictions accurately and XRP price predictions. But just to show you guys, again, here at CYPRX, we don't pump out any hopium or nothing like that. We were telling you all that XRP is probably and most likely going to tap back into 49 cents. And that XLR was going to head down into 64 to possibly 58 cents. Just take a second here and listen. Again, this is not to toot my own horn. This is to prove to you all that we don't pump out hopium, especially if you're listening to me here now for the first time. This is to show you guys that you're listening to somebody that actually knows what they're talking about and puts out information well in advance accurately. So just take a second here and listen. To see a risk on market move, when we have to break that 52 to 57 cent threshold to see any higher targets in an optimistic risk on market sentiment. Okay. It's not just going to require some magic Fibonacci or some trend line breakout like all these freaking bullish moon boys on the internet have been telling y'all. How many people, I'm telling you guys right now, go back in the XRP community right now and prove me wrong. How many people across the board with thousands of followers were telling you guys XRP broke out? XRP broke out of the 5-year trend line, whatever the heck that it's been printing. I guarantee you can go find them. You can go find them. And now, that was back when XRP was trading at 62 to 65 cents. Now it's trading at 49 cents. And those same people are left wondering what the heck is going on. My 5-year breakout that I was touting to my community didn't work. Why is XRP not at its new all-time high? Because they don't understand the sentiment. They don't understand the liquidity shift, right? What I mean by that, liquidity got sucked out of risk assets and came back into safer haven assets. It's that simple because of the geopolitical spectrum. Global investors that are not prone to take on risk in a risk-off environment, all right? So anyways, to the downside. 49 cents still remains. Right now, we're trading at about 51 cents. If we can tap back into 49 cents, maybe possibly create a double bottom and hold that, I will continue to buy more at 49 cents. Anything. So as you guys heard right there, when I recorded this video breakdown, we were trading at 51 cents, right? And I told you all that we're most likely going to tap back into 49 cents. Well, if you can head over to the XRP charts, look at this. We've rejected 51 cents, which is where we were trading at the time that I made this video breakdown. Okay. And we have now traded back down into 49 cents. How do I know that? How did I know that at the time? Because we have institutional delta levels where if these sell deltas at 52 to 51 cents that I was showing you all back 7 days ago did not break, the only logical explanation was that the market was going to push price back down into buy deltas institutionally for better positioning. Okay. And you can see now that that is happening. So we are back down at the 49 cent, give or take area. We're about trading 49 cents and some odd pennies right there. Okay. But we're trading back in the area. All right, let's continue. So that was XRP. That was 7 days ago. I told you guys that. Again, just showing you all accuracy, no hopium, no hype, no nothing. Hopefully you all respect that of us here at CYPRX. We're constantly chucking out accuracy to you guys. Smash that thumbs up button, subscribe if you're here for the first time. And all of this is like, oh my gosh, this guy's actually making sense. I actually want to dig a little bit further and understand what he's talking about because some of it doesn't make sense to me. Come join our community. You'll read documents. You'll be able to tap into our fundamental Zoom calls. You'll be able to tap into the institutional deltas and you'll be able to ask questions. I cannot stress enough that now is the time to push your education further. I cannot stress that enough. Back to Axelar real fast. So just take a second here and listen. It's about 20 minutes. And again, this video is public on the CYPRX YouTube. This is from 7 days ago. It's titled XRP XLR over $100 billion gone. What is happening to crypto? Okay, if you guys want to go back and rewatch this. So let's go to 20 minutes and 10 seconds where we talk about XLR. The XLR real quick, same thing on the updates. No real change. Anything below 72 cents, we're looking at 64 cents for our next area of interest. That would be lovely because that would put me back at my overall average price in for XLR, or roughly around that, give or take. My average price in is roughly about 55 to about 62 cents is when I was buying XLR. So it'll put me closer back down to my average price in for XLR, which will be phenomenal. All right, so 64 cents to 58 cents on an increased risk off market sentiment. Again, that means any geopolitical tensions and escalations or anything weighing on the digital asset ecosystem. That's where I will be looking to plug more capital in. If we can hold above 72 cents and revisit. Right. Okay. And so this is when we were trading at 72 cents on XLR. Well, if we head over to the XLR charts, you guys can see right now, it looks pretty apparent that we're about to dip down into that 58-cent psychological level. I would not be surprised if later this week, or even as we roll over into Monday's open, we dip down into that 58 cents. But you can see 64 cents has been met. And where we were trading at back when I made this video breakdown was all the way up here at 72 cents. Right. So just showing you guys accuracy across the board. I'm not here to toot my own horn. I'm here to push education further. That is my goal here as a mentor in the crypto space, as an influencer, whatever it is that you want to call me, as an educator. I'm here to educate you all and really enlighten you on what is happening in the market so that way you're not confused. Showing you guys how I've consistently made money over the past 5 consecutive years that I've been an active and funded trader in this space. I mean, it's insane, again, what people are not paying attention to because they want to stick to the retail way of doing things. All right. So moving forward, again, just giving you guys those target updates on XLR right now. I'm looking for if we can break below 62 cents, which it's looking based off of this bearish candlestick like that might happen. I'm looking for a dip down into 58 cents where I have some buy limits, and those buy limits will be triggered. Anything below that, I'll give you guys another market update. That would be absolutely phenomenal because then we could get into positions that we have not seen since back from September lows, which would be phenomenal. Looking at XRP, same thing as previous bearish targets. I feel like I'm beating a dead horse. We're still looking for those lower levels at 44 cents if we can see a break of 49 cents. However, right now it's looking like market participants or larger players than you and I are having a hard time breaking 49 cents. So in order to see those levels, we would need to see a dip back down below 49 cents, a bearish close, and then a further risk off market sentiment to see 44 cents come into fruition. I did just recently buy some XRP at 49 cents. In my personal opinion, it's an absolute steal. Anything below 50 cents on XRP is a steal in my personal opinion. However, Again, continued risk off market sentiment, and I'm going to be looking at 44 cents as those bearish targets. Bullish targets from previous videos still remain. So again, if you guys want those bullish targets, just to save time for this particular video breakdown, because we're already going on a 30-minute rant. So God bless your soul if you made it through this entire thing. Go ahead and smash that thumbs up button and subscribe. If I could smash that thumbs up button for you guys for watching this entire video breakdown and educating yourselves and sticking around with me this entire time, I would. So thumbs up to you all. I really do appreciate you guys for tapping in with me. So just go back. If you head over to the CYPRX YouTube, I'll zoom out for you guys and show you which video this is, because the bullish targets still, honest to God, remain the same. Those delta levels to the upside have not changed yet. You just click on videos. You just look at the full spectrum of videos that we have. And the last and most recent update was this one right here, XRP XLR breaking levels. It was from 7 days ago. So when you guys watch this, it'll be 8 days ago. So just go check that out. Skip towards the end of the video breakdown and you can gather those bullish targets. All right. So outside of that, hopefully you guys now, you're well awakened and aware to what's happening in the current market sentiment and the landscape in crypto, what's weighing on prices currently. Remember that those factors can change intraday. So as we head into tomorrow, as we head into this election, things could definitely change. Hopefully we see risk on market sentiment, and the total cryptocurrency market cap projection that I gave you guys of us just seeing a market pullback from previous month buying opportunities that took place is taking place, right? So hopefully we hold above that $2 trillion threshold, and we continue to see the upwards momentum in this digital asset ecosystem continue to unfold. So with that being said, many blessings to you guys. Again, if you all want to join our team of like-minded individuals, as you saw some active participants in the private community actually reading that report from yesterday, head over to CYPRXtrading.com. We have multiple different options for you all to enlighten yourself, whether that's through DeFi, whether that's you just want to join the Discord community to read our private reports, join our Zoom calls, and gather the institutional delta zones, or whether that's you want to dive a little bit deeper and you actually want to learn my trading strategy, you guys can access my trading mentorship as well. And again, it's not to try to get you guys to buy something. It's so that way you as individuals can take it upon yourself to further your education. And that is available to you, so you choose to access it. All right. Many blessings to you guys. I really do appreciate the love and the support. And if not, and you just want to continue with the free stuff, follow us on X, follow us on YouTube. You're going to continue to gather good, valid information. It's just not going to be as up to date because, again, me recording these videos, having to go through, upload them, it lags. So you're not going to see this video until, tomorrow, maybe 2 days from now. All right. Many blessings to you guys. As always, keep your head up out there. Be cognizant, be able to stomach this volatility. And it's easier to stomach the volatility when you actually know why your assets are not performing well. So many blessings to you guys. Be cognizant again, be aware out there. Be careful. Can't stress enough, man. Blessings to you guys. I'll see you all in the next one. Take it easy.